Ladies and gentlemen, thank you very much for taking trouble out of your occupied schedules and braving this inclemental weather. Thank you very much for joining us. We would like to start the first part of fiscal year 2018 financial results presentation. Let me first of all introduce the members present for the first part. Koji Kobayashi, Executive Vice President. Good afternoon, everyone. Masayoshi Shiroyanagi, Senior Managing Officer. Very nice to meet you all. First of all, Shiroyanagi will present to you the overview of financial results, and after that, we would open the floor for discussion. The presentation materials at the very outset gives you the cautionary notes with respect to the forward-looking statements, and please go through that at least once. So without further ado, I would like to have Shiroyanagi present the financial results. Good afternoon, ladies and gentlemen. I am Masayoshi Shiroyanagi. Thank you very much for joining us today for this financial results presentation. It is my pleasure to discuss Toyota's financial results for the fiscal year which ended in March 2018. Compared to the previous fiscal year, consolidated vehicle sales decreased by 7,000 units to 8,964,000 units. However, retail vehicle sales shown on the bottom of the slide increased by 190,000 units year on year. The difference between consolidated and retail vehicle sales is mainly due to the inclusion of increased sales of Chinese joint venture affiliates in retail vehicle sales. Consolidated financial results for the fiscal year were net revenue of 29,379.5 billion yen, operating income of 2,399.8 billion yen, pre-tax income of 2,620.4 billion yen, and net income of 2,493.9 billion yen. Please note that net income includes the positive impact of about 250 billion yen due to the U.S. tax reform. This is due mainly to the unwinding of deferred tax liabilities as a result of the reduction in the corporate tax rate concerning the accelerated depreciation of leased vehicles in our finance subsidiaries. Operating income increased by 405.4 billion yen compared to the previous fiscal year, as you see on the slide. I would like to explain the factors which impacted operating income year on year. First, the positive effect of foreign exchange rates was 265 billion yen. Please find the breakdown in footnote 1 in the bottom left corner of the slide. There was a 215 billion yen of positive transactional impact of foreign exchange rates, mainly resulting from a 3 yen depreciation against the dollar and an 11 yen depreciation against the euro. In addition, the translational impact of foreign exchange rates on the operating income of overseas subsidiaries resulted in a 25 billion yen increase in operating income. The impact on the fiscal year and balance of provisions in foreign currencies resulted in an additional 25 billion yen operating income increase. Secondly, the cost reduction efforts increased operating income by 165 billion yen as the impact of cost reduction efforts exceeded the increase in raw materials costs. Thirdly, with respect to marketing activities, a large increase in sales incentives in North America decreased operating income by 100 billion yen. Finally, expenses and other factors increased operating income by 60 billion yen due to the decrease in costs such as product quality-related expenses. For your information, excluding the overall impact of foreign exchange rates, swap valuation gains and losses, and other factors, operating income improved by 125 billion yen year on year. Compared to the previous forecast at the time we announced our third quarter results, operating income represents an improvement of 180 billion yen. Now I'd like to elaborate on operating income for each region from the left-hand side to the right-hand side of the slide. In Japan, vehicle sales decreased by 19,000 units year-on-year to 2,255,000 units due to the decreased vehicle sales of the Prius and Sienta. Operating income was up 455.7 billion yen year-on-year to 1,661.8 billion yen due to cost reduction efforts during model switchovers and marketing efforts, as well as the effect of foreign exchange rates. In North America, vehicle sales were down 31,000 units year-on-year to 2,806,000 units. The negative impact of decreased passenger vehicle sales, such as that of the Corolla, exceeded the positive impact of increased SUV sales, such as the RAV4. Operating income was 132.1 billion yen, down 198.7 billion yen compared to the previous fiscal year. This was largely a result of a temporary decline in local vehicle production related to the Camry's switchover, where production was supported by Japan, combined with increased sales incentives. Sales incentives were mainly devoted to reducing the increase in installment and lease payments on the back of rising interest rates. In Europe, vehicle sales grew by 43,000 units year-on-year to 968,000 units, driven by the CHR and hybrid vehicle models. Operating income was up 88.9 billion yen year-on-year to 77.1 billion yen. This was mainly a result of cost reduction efforts and a decrease in expenses. In Asia, vehicle sales were down 45,000 units year-on-year to 1,543,000 units. Operating income, however, was up 4.3 billion yen year-on-year to 428.8 billion yen as a result of solid sales in China and cost reduction efforts. In other regions, overall vehicle sales were up 45,000 units year-on-year to 1,392,000 units on the back of solid sales driven by the sales of Hilux and Etios in Central and South America. Operating income increased by 54.7 billion yen year-on-year to 118.1 billion yen. This was primarily due to marketing efforts, including increased vehicle sales and the effect of foreign exchange rates.
Next, please see this slide for the operating income of financial services. Operating income excluding swap valuation gains and losses for the fiscal year was up 43.4 billion yen year-on-year to 283.9 billion yen. This was mainly due to an increase in lending balance, a decrease in expenses related to loan losses, and decrease in the cost related to residual value losses in the U.S. lease businesses. Next, please look at this slide on shareholder return. With regards to the year-on-year dividend on shares of common stock, we plan to make it 120 yen per share. Thus, the dividend on shares of common stock for the fiscal year will be 220 yen per share, including the interim dividend of 100 yen per share. This represents an increase by 10 yen per share compared to the previous fiscal year. As a result, the payout ratio for the fiscal year will be 26.1%. We will continue to pay dividends stably and sustainably regardless of fluctuations in earnings, using a consolidated payout ratio of 30% as a benchmark. For your reference, excluding the temporary increase in net income due to the U.S. tax reform, the payout ratio for the fiscal year would be 29%. This summarizes our shareholder return. The total amount of dividends on both shares of common stock and Model AA class shares, together with the fiscal year ended March 2018, will be 650.1 billion yen. We also plan to buy back up to 300 billion yen, or 55 million shares of common stock, as the year-end shareholder return. Since 249.9 billion yen worth of shares of common stock were already repurchased as shareholder return for the first half of the fiscal year, the total share repurchase of the fiscal year, which ended in March 2018, will be up to 549.9 billion yen, or 88 million shares. As a result, together with the year-end dividend, the total shareholder return for the fiscal year will be up to 1,200.1 billion yen, and the total return ratio will be a maximum of 48.1%. For the reference, excluding the temporary increase of net income due to the U.S. tax reform, the total return ratio would be 53.4%. Now, I would like to move on to discuss the forecast for the current fiscal year ending March 2019. Consolidated vehicle sales are expected to be 8.95 million units, down 14,000 units year-on-year. We anticipate that vehicle sales will increase in Asia, especially in Thailand, but decrease in Japan, where the new model impact will be diminishing, as well as in the Middle East. We have assumed the foreign exchange rates to be 105 yen per dollar and 130 yen per euro. We thus expect the yen to appreciate by 6 yen to the dollar and remain unchanged to the euro year-on-year. Based on this, our forecast of consolidated financial performances are net revenue of 29 trillion yen, operating income of 2,300 billion yen, pre-tax income of 2,450 billion yen, and net income of 2,120 billion yen. So please see this slide. We forecast a 99.8 billion yen decrease in operating income compared to the fiscal year, which ended in March 2018. Major factors are as follows. Firstly, the negative effect of forex rates, based on the assumption that the yen will appreciate to 105 yen per dollar, will be 230 billion yen. Secondly, we anticipate that the cost reduction efforts will have a positive impact on operating income of 130 billion yen due to the ongoing cost reduction activities, despite the anticipated increase in raw material costs continuing from the previous fiscal year. Thirdly, we estimate that the effects of marketing activities will be negative 50 billion yen, mainly due to an expected increase in sales incentives for North America on the back of rising interest rates. Finally, expenses are expected to have a positive impact of 50 billion yen due to a decrease in product quality-related expenses and other factors. As a consequence, excluding overall impact of forex rates and swap valuation gains and losses, operating income is expected to be up 130 billion yen year-on-year. In order to achieve further profit improvement, we will reinforce the Toyota production system and pursue cost reduction efforts across the company. Finally, we would like to take this opportunity to thank each and every one of our customers who chose us, as well as our dealers, suppliers, and all of our other stakeholders for making these financial results possible. We will further strengthen our profitability by further reducing costs and actively investing in future technologies. In this way, we would like to achieve a transformation from automotive company to a mobility company. We would appreciate your continued support and guidance. This concludes my presentation on the financial results of the fiscal year that ended in March 2018. Thank you.
Now, ladies and gentlemen, we would like to entertain questions from the audience, but before doing so, Kobayashi, Executive Vice President, is going to say a few words to you. Well, thank you very much for joining us, and we are indeed delighted to have such a high-level attendance by journalists. And by receiving many feedback or input from you, through our serious efforts, we are trying to have Toyota and Toyota Motor Corporation fully understood in its essence, and that's why we hold those meetings. But in the case of a full-year financial result announcement, there tends to be the situation where trivial technical issues and major strategic issues are combined in discussion. And therefore, in the first part, we have decided to have those pure financial results related presentation. And the second part, we are going to have Akio Toyoda explain to you his aspirations and the strategy that is going to be pursued going forward. We primarily have journalists here today, but we also have investors and shareholders because we would like to receive as many opinions as possible from as broad a spectrum of stakeholders so that we can benefit that and reflect that in Toyota's operations going forward. And that reflects our President's aspirations. Thank you very much. So please raise your hand if you wish to ask a question for the microphone to be brought to you. And I know that we have so many people in the audience, and we would like to receive questions from as many people in the audience as possible. So allow me to restrict one person to ask only 2 questions, up to 2 questions. So the first question first. Ando of a GG News Agency. My question is addressed to Mr. Kobayashi, EVP. In terms of the financial results of the fiscal year just ended and also the forecast for the currently running fiscal year, I have questions each. First of all, about the assessment of the actual results for fiscal year ending in March 18. When the financial result was announced in February, you said your assessment was cross. That is to say, target was not met. But what is your assessment? And moving on to the forecast for the fiscal year ending in March 2019, in terms of the sales revenue for the fiscal year ending in March 18, you revise those guidance every quarter. And are you being quite conservative in coming up with this forecast for the fiscal year ending in March 19? And with respect to North American business, in the forecast for the current fiscal year, the import restrictions or tariff on steel and aluminum or NAFTA negotiation by Trump administration, or in the eve of a mid-term election, there seems to be some protectionist tendencies in the trade area. Has that been incorporated in your forecast, or what is your stance vis-a-vis such a policy of the United States? On the previous occasion, when we made the financial result announcement for the third quarter on the entire fiscal year, excluding exchange rate fluctuations, we mentioned negative 55 billion, and that's why I said my evaluation is negative, and that was reported quite negatively, but our employees are working very hard. And employees believing that the assessment given to them was negative is not really good in rewarding their efforts. And I have been engaged in the field and track, and in terms of the high jump, we exceeded the hurdle, but still our body is still being swayed or not really solid on the ground, because excluding exchange rate fluctuation impact, the figure is 125 billion yen, but there are various factors incorporated in those numbers. Unless we can earn 300 billion or 400 billion yen, we simply cannot make up for any impact stemming from exchange rate fluctuations. However, for the current fiscal year announcement, we now have a clear idea of the challenges we are faced with. That is to say, in terms of fixed expenses, we saw the increase there by 240 billion yen, or exceeding 200 billion yen over a 5-year period, and it is clear In the financial statements, fixed expenses increased by 1 trillion yen over 5 years, with the sales volume not keeping pace with that. So that's clearly the challenge for us. Clarified, and also with the higher interest rates in the United States is to a certain extent offset by incentives. So that's another negative factor. In terms of cost reduction efforts on the gross basis, we have been generating cost reduction in excess of 300 billion yen. That is not much different from the past years. The President himself is emphasizing on TPS and cost reduction. Those efforts were initiated since the beginning of this year. So we are only 3 months in. Cost reduction is not that easy to be achieved. And frankly speaking, even if we talk about cost reduction, cost does not come down immediately. And when we talk about cost reduction, we are talking about gross cost overall. In the past, we were talking primarily about the manufacturing cost. But what President constantly says that employees of Toyota Motor Corporation does have the clear mindset of overall cost involved. That is to say, the TPS involves the manner and also the cost. People think that cost must be used very sparingly. And we need to restore that mindset. And that's why it's taking time for the clear benefits of cost reduction efforts to come up. For the fiscal year just ended, we actually generated 335 billion yen or so in cost savings. We would like to achieve that. And also, by different regions, we do have issues in North America at the moment. So although we did make such good results in cost reduction efforts, but now that we see the clear idea of where the challenges and problems are, by setting up a clear plan, we are going to enhance our earnings power. For the fiscal year ending in March 2019, since joining the January, I have been implementing changes, and also we have been revising those guidance every quarter. That's not good. But if we indicate too large the target, which may not be attained, that may cause confusion amongst in the minds of shareholders or stakeholders. Of course, we have to be very conservative in coming up with the budgets, but being too conservative is not good, simply wanting to exceed that. And therefore, it is conservative, but at the same time, it includes some element of aggressiveness as well. So included a higher target for cost reduction efforts. And so this number you see, the forecast, represents our hard work incorporated in that. We talked about North America, the NAFTA renegotiation, among others. It has not been settled, and there is no clear outlook of that, where it is going. And therefore, what we need to do is with Mr. Bulurua, EVP on the head, and with Mr. Jim Lentz, North America CEO, working together, we are now trying and working very hard to re-establish the earnings power in North America and earnings structure. We now have some clarity in terms of what needs to be done by when. What we are aiming at is to achieve 8% by 2020, because that represents the capability of North American operations. So we would like to bring it up to 8% by 2020 for North America. That's where we stand currently.
The person in the middle, please. Oshikiri from Nihon Keizai Shimbun newspaper. I have a following question about the U.S. market outlook. Well, because in the third quarter, the 2018 annual, the market forecast is like 16.8 million, and the Toyota will try to aim at the same level as the previous year. But recently, interest rates are increasing in the U.S. market. So what's, again, your latest outlook of the U.S. market? And also incentive last year. The previous year that it pushed down the income by 140 billion. But to what extent this incentive will adversely affect that Avalon and RAV4 will be launched as a new models? How can you overcome this difficulty of incentive problem in the U.S. market? That's the second question. My third question is that R&D cost this year, it's likely to increase as well, research cost. But for the next year, 5% increase, 25% is for the next generation advanced technology development within the R&D budget. But this year, within the R&D, what is allocation breakdown for the new technology, generation technology? What's the percentage that you give, and which area of research you try to increase your R&D budget? Well, in terms of North America, the 16.8 million units market size is still the same. But in that sense, still, truck is increasing. SUV and trucks are increasing as percentage. But there could be maybe the delivery, the capacity increase was delayed, so we were a bit slow in supply. But this year we can catch up with that. So we like to sell more the sellable vehicles, attractive vehicles, to satisfy the demand of the U.S. customers. Incentive issue, as I mentioned earlier, still. The residual value loss is another issue related to lease vehicles, especially in the used vehicle market is still stagnant, so that the residual value loss is occurring still. So that has an impact on the finance section, financial services. Interest rates are going up slightly in the U.S. So the incentive of this year's level are likely to be continued. But the way you give the incentive should be scrutinized more in a specific way. It's not automatic giving out of the incentive, but rather every month or every 3 months, by looking at the market trend, you have to give the incentive according to each model, subtype, and so on. So based upon the study result, we like to cope with this incentive payout more carefully. About R&D expenses, and for the new area, about 3% is for this kind of a particular area. R&D percent is 3%, but still, in the new generation businesses, or the new technology development is something like 35 of the total. So gradually, there's a shift to the new generation technology, and we continue that trend of emphasizing the new technology, connected and electrification, and new areas, and new mobility society related advance payment investment is necessary in R&D. So TPS and the cost reduction are contributing to get the earning power of a company in order to secure the fund for this the new technology R&D.
May I invite the next question, please? Yes, please. First on this side of the room. Thank you very much. Shikano of NHK. I have 2 questions to Mr. Kobayashi. Question number 1, which is somewhat related to the earlier question. In order to enhance earnings capability, you're focusing on TPS or cost reduction. They are extremely important. And President Akio also has been emphasizing that repeatedly. But once again, what are the challenges we have today, and what sort of initiatives and activities concretely are you implementing right now? Could you share that with us? And question number 2, in terms of this financial results announcement, it starts at 1:30, and you have 2 parts. This is a new method. As was mentioned earlier, once again, I would like you to explain the fact that you have somehow changed the way in which those press conferences are held since you became EVP. So could you share with us the objective of having this method? Well, this time for this meeting, President Toyoda, all of a sudden, at the ceremony inviting new recruits, talked about the focus on TPS and cost reduction. But these are nothing new for Toyota. However, Toyota's employees, our colleagues, are fully aware of the importance of TPS and cost reduction? Not necessarily. The people working for Toyota, in terms of the mentality, the constitution, must be, first of all, solidly held in their minds, and that in itself should be cultivated by human resource development in the company, because the company, after all, is the group of people. And if individual employees are fully aware of the importance of TPS and cost reduction, having that in the main mindset, so they'll realize the men must be used very carefully and no waste should be allowed. I'm sure you're working under the guidance of your bosses. We are now in the process of creating the new plant. In the manufacturing cost reduction, we are generating over 300 billion yen in savings through cost reduction efforts. That's well established. But what we see a problem still residing relates to the administrative and other professional areas. That is to say, the unnecessary meetings held or unnecessary time spent for round behind-the-scenes coordination and other wasteful activities. We have the Toyota terminology called Genchi Genbutsu, regardless of the titles. Let's discuss it out in the Gemba. That's the quickest way to find solution. However, unawares, we tend to simply go up the hierarchy to obtain the authorization. That takes time. And also, although it is not necessary, the information materials are prepared, even if nobody reads it. And these have been identified as wasteful efforts, not creating any values. So with general managers included in discussion, we started having those discussions to identify wasteful activities. So including President itself, he says he wants to join those meetings to hear out what are the problems, what are the pain points in the actual workplaces. And in doing so, if there is any element of waste identified, we should discontinue those so that we can generate the truly necessary manner to be used for value-creating activities. So those would be the starting point for eliminating wastes. The fact that we are having these two parts in the press briefing, we realize how valuable time is, and you are joining us for those. So my principle is that I don't want to talk about things that we are not doing, but we would like to properly convey to you what we are doing. And if we want to do that, I want President's ideas and his thoughts to be presented to you. Of course, the outcome is thanks to the efforts made by our suppliers, dealers, and others. So we would cover those in the financial result presentation first, and then that can be followed by President's own presentation, talking about his own aspirations and strategy. We received some criticism. After President's presentation, we'll have a media scrum, and we'll talk myself and also Shiro Yanagi talk about the answers that have not been covered in the press conference.
Next question, please. Takahashi of Sankei Shimbun newspaper. In 2019, as of March, what's your outlook or the forecast of Chinese market? In consolidated results, it's a negative, but group total sales units is a positive. In other words, you're expecting increase occurring in China. What's the details of the increase in China? And then the equity-based, the consolidated company-based, the profit is likely to go down. So are you thinking the profitability is deteriorated because of that? Could you please give us more details on that? Another question is that during the transaction of the Tokyo stock market, you are making this announcement. Didn't you feel resistant to have this announcement where the stock market is still open? Well, about the situation in China, well, in 2018, the market is still doing well, 30 million units, or 29.8 million units, a very good condition. Our sales figure, as of 2017, volume was 1.29 million. Lexus and others are setting quite to a highest record in China. But 2018, the 1.4 million units. Therefore, as of December, the Camry was launched, Levin was launched, and they are doing well. And CHR, Izoa, is now launched as a new in China. So these are new models added in Chinese market. So we like to achieve the growth more than the average growth rate in the market. As to the equity in earning of affiliated companies in China, of course, volume, based upon the volume increase, that we will increase that too. So there's no deterioration sign in Chinese market at all in terms of profitability. During the stock exchange operating hour, we are making this announcement today. Of course, within the company, some people were reluctant to do this announcement, but we have two parts of the announcement, and you cannot have the session too late to invite you. And first, of course, you need time to communicate to your head office as well. So we thought of all that consideration. So automatically, this is the time we chose to have this press conference. So that we are not having this meeting just because we enjoy the increase of this income. But whatever, if you agree, this kind of format of a press conference, we will continue this format. During the first quarter to the third quarter, we might make changes, especially a little bit, because we are so pleased to have a President Toyota to be with us today. So we want him to really disclose what his real feeling and intention is. So that's why we set up this meeting in this way. In the next year and afterwards, do you intend to keep this kind of format of press conference? Yes, we do. This kind of a meeting, yes.
We're running out of time, but we would like to entertain questions from as many people as possible. So from here on, may I restrict questions to one question per person. Here, I would like to invite questions from Nagoya office. We have I would like to entertain questions from two journalists from Nagoya. First, Chubu Keizai Shimbun. Yosaki is my name. Thank you very much for this opportunity. Question to Mr. Kobayashi. The forecast for domestic sales is 1.53 million units. You're talking about domestic production of 3 million, and this domestic sales must be the foundation for that 3 million domestic production. But at 1.53 million, maybe somewhat tough to preserve this 3 million. How are you going to put an end to decline in domestic sales? Could you share with us your views on that? It is quite true that here in Japan, including population, the demographics, the conditions are not extremely exciting, and also the way in which vehicles are used. Look at Tokyo, where people don't necessarily need vehicles, but in remote areas, people do need vehicles. We don't think that this 1.53 million is acceptable, but rather than simply changing the channel system, when the sales are growing, we will be able to increase channels. But what we need to do currently is to enhance and improve the services we offer customers, to make services readily accessible to customers. We have decided to assign individual executive vice president to different regions. And by discussing closely with individuals, we want to make sure that the existing vehicles can be used in more enjoyable way. And that's why we continue to aim at higher than 1.5 million units for domestic sales. And what was the other aspect of a question? Was there anything else? I would like to invite another person from Nagoya to ask a question. Journalist from Asahi Newspaper. My name is Yamamoto from Asahi Newspaper. Thank you for this opportunity. And I would like to ask Mr. Kobayashi about research and development expenditures. You need to enhance earnings capability. Otherwise, you said you will not be able to generate resources to invest in foreign future technology. For 5 years running, research and development expenses are increasing by 1 trillion yen. What is your view of this 1 trillion yen? Is it enough, or do you need to add further to be invested in research and development? Your rivals, new rivals such as IT giants, Amazon, whatnot, they are spending more than 1.5 times more of investment than Toyota. What is your assessment of research and development expenses? In March, you decided to invest more than 300 billion yen in investing those software together with Denso and others. And could you also share with us your thoughts on alliance, especially for autonomous driving, among others? As you already know, when it comes to research and development, the more you allocate, more you tend to spend. What is important is what the research and development expenses are used for and when the results are going to be generated. So you need to have a break in place. You need to introduce TPS and also cost reduction to the research and development efforts as well, because all the researchers, engineers want to do whatever they want to do in researching or developing their efforts, so they tend to conduct those activities at full throttle. But company has its own overall objective, and therefore we need to prioritize the research and development spending, aiming at the ultimate corporate objective. Otherwise, it will simply continue expanding. And at this stage, we are making investments for the technology in the future, which including connectivity, among others, and they are not really generating earnings. And since we are allocating more to those investments in new areas, we need to be more efficient in making research and development for existing areas to make it more effective. And also involving companies within Toyota Group, because take IT project, a single company alone cannot conduct those research and development, and therefore by collaborating with the various companies within group, or in some cases partners from other areas, we would like to continue those research and development to come up with the vehicles that can really satisfy our customers. And other companies, I'm sure, are focusing on those priority areas, collaborating with us for research and development.
Another question from members in Tokyo, please. Tomioka of Toyo Keizai. I have one question about R&D expenses explained. How about capital, the investment you are increasing, and 1 trillion yen is amortization or depreciation costs now. So the capital investment in facilities, especially Europe is increasing, and Japan is planning to increase. So capital investment plan in the future outlook, and what is your prioritized the area of investment this term? Yes, same as R&D, because this you can depreciate that, so that you have to look at the sales versus depreciation costs. Otherwise, you suffer from deficit. Same as R&D, you have to set a certain limit and then give priority. Hybrid is emphasized in Europe, and you need to increase the capacity to supply hybrid vehicle domestically in Japan. And TNG, switching to TNG and then the GA, and then welfare and other things, or building improvement and so on, other area where capital investment will be made. So next question, please.
Hans of Automotive News. Thank you for the opportunity. For the fourth quarter, I would like you to elaborate on the details of the fourth quarter. The operating income has increased here. Why did that happen? Could you cite some reasons behind that increase in operating income? And also, could you also elaborate on the regional breakdown, the United States, for example, the fourth quarter? First of all, with respect to the fourth quarter, compared with the same period last fiscal year, operating income increased by 190.7 billion yen. The exchange rate subtracted 30 billion yen, but cost reduction efforts generated 30 billion yen positive, and also other sales activities, 55 billion yen improvement. And reduction in various expenses added 145 billion. This is a positive factor. And major factor in this area relates to the quality-related expenses. The number of field fixes decreased in this period, and also there has been some pause in this area, including Takata-related issues, and we are making efforts to reduce those field fix issues from the customer's perspective. And those efforts started generating benefits, especially starting in fourth quarter, and that caused increasing operating income in the fourth quarter. I don't have the regional breakdown, so allow me to refrain from commenting on that.
I suppose you have additional questions, but unfortunately time is running short, so we can entertain just one more question. Thank you. Thank you. News Socrat, Net Media. My name is Chia. My question is to Mr. Kobayashi, EVP. Mr. Kobayashi, you became a vice president, and then it was a shocking news to the people inside Toyota and outside. I was also shocked myself. The reason is that you are a bit older than the others, and And you might have changed, but you are above this retirement age of the executives, and you are not the director in the head office, but you had a great achievement, but you were still promoted to the headquarters of Toyota again. So when you accepted this offer, how did you interpret this offer and an intention of Mr. Toyota to offer you this position? As earlier people asked the question and you responded as well, that Mr. Kobayashi and your role, function, is that inside as well as outside, you would be in charge of reorganizing the group companies within Toyota. That's interpretation of your function by other people. But what do you think of this expectation? You came back to Toyota TMC from Denso. What's the difference? Did you feel something different now? The human affairs and the management, I cannot make my own decision. It was a decision made by President Toyoda himself. I really wondered and had a perplex. I'm already 70 years old, older than others. But in Japan, I think everyone needs to keep working, I think, in the future in Japan. So, when you think of retirement standard and other criteria, I was not a director in the head office and so on, but everything was taken into account by Mr. Toyoda, and he himself made a decision. So it's not something I should comment on, but I feel severe, heavy responsibility. I worked with him for many years, even in Denso. I had a communication, close communication with President Toyoda, and then his aspirations and his thoughts, I think I fully understand. So my role, my function is, as I mentioned earlier, that his strategy and his wishes and comments and feelings should be quickly pursued myself to try to implement that inside as well as outside. Starting on January 1st, I started that task to be implemented, as I said. There was a bit of confusion inside the company, but I would like to be persistent to try to communicate with each employee of the company and other members and stakeholders to implement this. Reorganization of the Toyota Group is not clearly defined as my duty. There are 6 executive presidents, vice presidents, and president and others who and I should talk to each other, and then maybe the president himself decided that I should give this task for the time being. But within the group, our power should be fully, maximally utilized. So I think that the organization is really streamlined and improved to make the full capacity. And then my impression after coming back to Toyota from Denso, well, for each company has its own merits and demerits, unique features, characteristics. So I cannot just simply explain what's the difference. But in both companies, you have to unite your efforts, and then both companies have that good teamwork, really working well. That's all. Thank you very much.
Thank you very much. Since the time has come to complete the first part, I would like to complete the first part of this press briefing. And as was mentioned by Kobayashi, once the second part is over, both Kobayashi and Shiroyanagi will stay on to receive your questions, so please join them for that as well. Thank you very much. The first part of this session is adjourned.